Good morning, folks. It is Saturday, March 11. In my last video, the sound was really bad, and I realized after the fact I had two microphones turned on. And so in this video, hopefully the sound is better. I'm trying out a new mic. This is a Blue Yeti. My other mic is a Rode Podcaster, but I'm not getting enough volume out of the Rode, so trying a new one. We'll see what we think of this Yeti. Let's jump right into the charts. Obviously, the big news in the last couple of days, we've had two bank collapses. I'm going to do a separate video where we'll look at some bank charts and talk about what's going on in the banking industry. And I've got some banking information that I think you'll find valuable. Let's jump right into the charts. This is gold in the monthly time frame. Nothing has changed in this time frame. We're still on track. Target's 25.10. My target in this time frame is 25.10. I believe we're on track for that. We got a pause in February, pushing into resistance, other stuff happening in the financial markets. So we've kind of gone into a sideways consolidation. Notice that MACD is still in bull mode, primary trend suggesting that the primary trend remains to the upside and energy is elevated. So again, reiterate, my target in that time frame is 25.10, and I believe we'll get there. Now, this is gold in the weekly. It looks better zoomed out. That is a bullish hammer. So that candle for last week, that is a bullish hammer in Japanese candlestick terms. Notice that we had, bottom support there. That's not a straight line. Sorry about that. And then we get this bullish hammer last week. So anyway, nice action in the weekly time frame. MACD in bull mode. Still on a buy signal. It's very close, but we're still on a buy signal there. Energy about mid-range. That's the weekly. In the daily time frame, big move on Friday. And a couple of things here. Notice that we're back on a buy signal. So we got a little bit of a shakeout in the last week. Back on a buy signal. Energy is very elevated, rising sharply. This move on Friday, and of course you're going to see my bias here, stocks are not doing well. Stocks did not do well on Thursday and Friday, and notice what gold did on Thursday and Friday. In my opinion, and again, this demonstrates my bias against stocks and towards precious metals. People are bailing on stocks. They're moving into the precious metals. Physical precious metals are the only safe investment, in my opinion. If you're looking for a safe place to put your money, it is physical precious metals and essentially nothing else. I mean, calories. I mean, we could talk about food if you're a prepper. The only place you're going to protect your wealth right now is intangible goods. Food, precious metals, real estate, perhaps. Be very careful in real estate. It's not doing well either. Albeit all real estate markets are local. So, my market in San Diego versus, Podunk, Oklahoma, or backwoods, Montana, all of those are very different real estate markets. But in general, real estate is not the place to have your money right now. So gold in the daily time frame, nice look, bumped into the 50-day moving average, pulled back a little bit on Friday. But again, in my opinion, that is people moving into the precious metals after seeing what the stock markets are doing. And we'll look at the charts for the stock markets. Another comment on this chart. So notice how, gold came down and violated the bottom of this support resistance zone that I've had on this chart for months now, a couple of months. But support and resistance levels every analyst is going to draw them a little bit differently. I could have pulled that all the way down there, but that doesn't really look good to me. I try to catch as many of the tops and bottoms as I can. And so that's my objective when I'm drawing support and resistance levels. We could have done something like that. Anyway, my point is that we did drop below the zone that I had drawn, but obviously so far that penetration, that was still a support area. We got a nice bounce. Big drop on, I think that was must have been Tuesday, and found support there, and now we're bouncing from that level. And so, support zones are somewhat arbitrary, but for me, it's always best to think of them as zones, not straight lines. When we draw straight lines like that and expect price to react at that line, it's got to react there. We're just asking we're asking for our wishes to be violated. So I think that's enough of my babbling on that chart. Silver in the monthly, nothing exciting. Silver is definitely lagging gold right now. They trade places. Sometimes gold leads, sometimes silver leads. Right now, gold is leading. But there's nothing to be concerned about in this chart. Basically we're bumping along sideways. We talk about a flag pattern, pennant pattern, not a great one, but isn't horrible either. So anyway, that's the monthly silver. MACD right on the zero line, energy pretty low. Weekly time frame looking a little bit better. Solid up leg, good sized correction. We're going to find support at some point, and silver will follow gold higher. Notice that price nearly touched the lower median line of the shift pitchfork before bouncing. MACD in bull mode on a sell signal, energy very low. Daily time frame looks a little bit better. But a lot of overhead resistance. After dropping below the 200, not just dropping, slicing on Tuesday, slicing through the 200-day moving average like it didn't even exist. We got a couple of days of sideways bumping, and then Friday, nice move up, rising volume on Friday's move. Histograms hinting at another buy signal in silver, but we don't have it yet. Energy is very low. Let's keep rolling. Mining stocks, not exciting in the monthly time frame. MACD on a sell signal in bear mode. Energy is low. Weekly time frame, a lot of overhead resistance there. Playing with the 40-week moving average, Overhead resistance in this support resistance zone, and then we've got the 10-week moving average just above that. MACD in bull mode on a sell signal, energy is very low. So just not much excitement in the longer time frames for silver, or in the daily for that matter. Silver just lagging right now. Pushed up into the 200-day moving average and then pulled back on Friday. So no joy there. Energy low, possibly rising, MACD in bear mode. So not exciting in silver, but silver will catch up with gold, assuming that this uptrend continues. So, another comment on, let's go back to the daily gold chart. This was an opportunity for the big traders to shake out weak hands, push price down decisively. People like me, I was all excited. It's like, ooh, new bull market starting, new up leg, and then we get this big washout on Tuesday. Just tanked sentiment. Certainly affected my sentiment on Tuesday, and now we're back into what I believe is a continuation of this up leg that started back there. So anyway, let's keep going. Mining stocks in the weekly, mining stocks in the daily. U.S. dollar. And so that's one of the headwinds that we're dealing with right now, is that strength in the U.S. dollar tends to show up as weakness in the precious metals. Yeah, let's keep rolling. That's the monthly time frame. Weekly time frame pushed up into resistance at the 40-week moving average, pulled back from that level. We've got a horizontal support resistance zone, and looks like, you know, price, the dollar is hasn't been able so far to push above that level. MACD in bear mode, energy is elevated and rising. Daily time frame for the dollar. I was expecting a push up to the 200-day moving average, and then on Wednesday we got this toppy looking doji candle, and then of course big drop on Thursday and Friday. A lot going on in the financial markets all around the world. Part of the movement in the dollar, one of the European bank, must have been this European Central Bank, made a dovish statement saying they're going to be one and done. They're going to do one more rate hike, and then they'll be done hiking. I can't call. I don't have any reason to call BS on that, other than my expectation is that they're not. It's not going to be one and done. We have a global debt collapse happening, and banks are raising interest rates, trying to attract bond buyers back into the market. They're not having much luck, but they're trying. So. But anyway, that's one of the things that caused the dollar to be strong, was that the euro weakened after the ECB made their dovish statement. Weakness in the euro translates into strength in the dollar, and of course now the dollar's selling back off. So that's the dollar. Debt markets. And they've pulled back in the last week. We've talked about this chart a bunch. This is yield on the 10-year note, weekly time frame. Drop down, testing support at the 10-week moving average and the lower median line of this modified shift pitchfork. MACD in bull mode on a sell signal. Energy's about mid-range. Again, my bias, I'm expecting higher interest rates. These charts don't, you wouldn't think that looking at the short-term action in these debt markets, but long-term, my expectation is for higher rates. Again, they have to do something to sell their bonds. The Western governments are all running deficit spending. In the U.S., it's over $1 trillion a year. Probably with honest accounting, it's several $1 trillion a year of deficit spending. And if they want to maintain the pretense of selling bonds and not just directly printing fiat currency, they got to do something to sell their bonds. But we'll see. Global debt collapse. In case I haven't said that a couple of times already. 30-year fixed rate loan going to cost you 7.3%. Bitcoin, not a happy camper. And of course, that's one of the things that's going on in the banking industry. Was it Silvergate, I believe, is the bank. That's one of the banks that collapsed this week. And yes, Silvergate. And large exposure to the crypto. None of the banks wanted to be involved with crypto companies, and so Silvergate stepped into that vacuum, and they're paying the price. In my opinion, all of this activity, the Silvergate Bank failing, well, they haven't failed yet. They're in the process of failing. And then the fallout in the crypto space, it's all related to the FTX bankruptcy. When FTX filed their bankruptcy, they listed 100. I've been saying 143. I noticed this morning it's 193. So 193 companies that are likely to be affected in some manner by FTX's bankruptcy. And so obviously Silvergate Bank was one of them. Several of the crypto coins and tokens took big hits. If we look, this is Thursday. So on Thursday alone, Bitcoin lost 9%. So, and then, followed that up with 0.5% on Friday. Let's just out of curiosity. So in the weekly, 10.5%. So if you're in Bitcoin, you just lost 10.5%. Another one of my biases, all of the crypto coins and tokens, they're nothing but digital beanie babies, and their true value is zero. I believe ultimately they will achieve their true value of zero. And if you've got money in crypto, yeah, I don't know. We all have to make our own investment decisions. I guess that's what I'll say, and leave it there. Let's talk about the equity markets. This is the S&P 500 daily time frame. Looks like my call on the island reversal as a topping pattern so far is proving fairly accurate. Pushed up into test that horizontal support resistance zone. Obviously the test failed, and now we've got a sharp decline from that level. Notice that we violated the 200-day moving average, sliced right below it, and then all of Friday's action was below that level. We've got a minor support level in here. What's that? 3860 or so. Appears to be acting, as support, at least for now. MACD has dropped into bear mode, obviously on a sell signal. Energy is very low, and so nothing in this chart would suggest that we might get a bounce on Monday. Other than this is the very sharp sell-off, which kind of opens up two possibilities, that the sell-off can continue, or we might get a relief rally, like this, 3 days of a bullish move, counter trend move before the next leg down. So we'll just have to see what happens. Weekly time frame, again, we've violated support at the 40-week moving average and the lower median line of this Andrews pitchfork. So closed very near the low of the week. That's a bearish indication. MACD is still just barely in bull mode on a buy signal. Looks like could change quite quickly, drop into bear mode and get a new sell signal. Energy dropping rapidly. Monthly time frame. Notice that we're back. We're just above that 20% bear market, or the demarcation between bear market and normal market. Not that we haven't had normal equity markets for 20 years at least, I would say, since the bursting of the dot-com bubble. Well, and actually leading into the obviously dot-com bubble was not normal market. We haven't had normal equity markets for 25 years or more. But point here is that very close to dropping through that 20% level, which would put S&P 500 back into bear mode. MACD in bull mode, but on a sell signal, energy low. This is the Dow in the daily. Again, violated the 200-day moving average. We've got this horizontal support resistance zone in here. Price is kind of playing around in there. MACD's already in bear mode on a sell signal, energy very low. So Dow's not looking good in the daily time frame. And again, sharp sell-off. Maybe we get a bounce. Maybe it continues. How's that for a definitive answer? It's not, obviously. And so here's Dow in the weekly. So far, holding support on the bottom lower median line of this Andrews pitchfork. But notice that dropped right through, sliced right through the 40-week moving average without pause. And a close very, very near the low of the week. That's bearish. Large bar. So, we could talk about this being a wide-ranging bar, which is a sign of elevated energy. And of course, in this case, it's energy to the downside. New sell signal, energy very low. Dow in the monthly, big drop so far this month. Still in bull mode, MACD, which, that suggests that the primary trend remains to the upside. We'll see. Energy mid-range. NASDAQ, this is the daily time frame, has penetrated both the 50 and the 200. We're about to get a golden cross, the 50-day moving above the 200, but this current action is going to make that very brief, if it happens at all, that the 50 will most likely move back below the 200. So MACD in bear mode, not quite on sell. It is on sell signal, not quite fully into bear mode. NASDAQ weekly time frame, playing with support, potential support at the 40 and 10-week moving averages. MACD, just below the zero level on a buy signal. Excuse me. NASDAQ in the monthly remains in bear market territory. We're below 20, more than 20% below the peak back here in late 21. This parabolic curve is acting as support. We can see, support several times along here. In my opinion, if that parabolic support level fails, we got a little bit of a chance that we find support at this horizontal level. Below that, that's another 20% drop before we find any support in NASDAQ. So potentially a big drop there in the tech stocks. Oil, Biden administration still releasing oil from the SPR. Don't know what they're thinking. So hard to judge what the oil markets are actually doing without the influence of SPR releases. That's it for the charts in this video. I will be doing another video this weekend. I want to look at the banking sector and a few of the crypto related charts. So talk to you soon, folks.